Hey traders from around the world, this is Jerremy Alexander Newsome with Real Life Trading. Hope you're doing absolutely fantastic. It is Wednesday, the last day of September. Can you guys believe that? It is September 30th. That's right, 3-0. Wow, unreal. Checking out the markets today, last day of September, and September wasn't as bearish of a month as a lot of people thought it would be. There's a lot of things about the blood moon and the Shemitah year and all that kind of stuff going on through September, and some of it kind of parses over to October as well. But if you really look at the percentages, it really wasn't that bad. September 1st, I believe, is this day. So if you're looking at the open of September to where we are right now, we're up just a little bit, but even with all of this volatility, very volatile month, that's for sure. But we are technically, as of right now, up. Now, obviously, everything could change at the end of the day. I don't know if it will, but here's what I'm going to go ahead and come out and say. And I mentioned this a little bit on Monday as well. We are trading, and we made it to a relative support. So this is a location where it absolutely could bounce. We can make a little bit of a higher low here. This is the DIA, by the way, on the ETF that tracks the Dow Jones. And so we did roll over. I mean, that was the thing. I mentioned to myself, I thought, all right, well, we have a very high probability chance that this could break bullish. It shouldn't, but if it does, it'll definitely trap a lot of people. But if it rolls over, I'll be slightly more bearish. Well, we got in bearish, some rollovers happened, everything was good. Well, today's gap, in my opinion, is actually pretty bullish. And my thought is going to be this. If this gap from today does not work, and by work, I mean make higher highs and higher lows on the market in general. If it does not work, then this bear market is serious. It is for cereal. Like, there are going to be things that are going to be moving quite fiercely in October. And by not work, I mean, it would look like something like this tomorrow, big bearish candle, or we start really making some lower lows as of today. So I'm thinking that we could really just kind of do something like this. If we get that, I'm still a little bearish, but not as much. But if, again, this gap today doesn't work, it's We're therealdeal.com. Here's the SPY, and the reason I like the SPY, again, notice where we traded to, right? We traded right to a support. So we got triggered in bearish on the 22nd of September. We're still a little profitable. Didn't quite reach my target. Probably could have taken or should have taken a little bit off at this support level, but it wasn't quite 2 hours yet. But anyway, we have a nice high wave candle as of yesterday at a support. And today we opened above the high of that candle. Phenomenal morning star reversal pattern. Again, if we roll over, specifically at the end of the day, if we get like a giant upper wick or something, and we fill this gap, that's going to be really, really fascinating. If we continue lower tomorrow, Friday, or next week, man, we're in for a ride. Otherwise, I think that we really could just start forming some type of basing accumulation pattern, a little bit of volatility down here. This is a morning star reversal, so I will say don't be terrified of going bullish. I would just kind of keep an eye on and wait a little bit for what tomorrow could bring. Wait for the end of the day to close, and if you want to make some moves on a higher high, you definitely could do so. Here's your hourly charts on the SPY. Hourly charts on the SPY, we do have a white candle, and it is gapping up. So it is a little bit of a retest gap. So yes, absolutely, we could pull back a little bit today, tomorrow, and bounce some. I'm just more or less saying if we get a big black candle and we start making some lower lows and some lower highs, and this gap fills and we just keep heading on down, not going to be bullish at that point. So at this point, I am, again, saying, yeah, we trade to some lows, we trade to some supports. The whole Shemitah year thing, I think it had its impact. I don't really think it was as interesting as some people thought it would be. Yes, this was a fun bearish move. Yes, we traded a lot of it, and that's really about it. So cool, hanging out. There it is. There's the SPY. Here's the Qs. Qs really not doing that much. Again, nice little morning star pattern at a support level, which is $100.47. And here's the IWM. IWM, also really nice little morning star pattern so far. If we close just like this today, tomorrow, boom, be bullish right over 1914. I'd be really interested to see how that plays out. So anyway, we could bounce. We'll see what happens. Let's check out some stocks. Apple. I am shorting Apple today on the pullback. This was some analysis from yesterday. So if you didn't get a chance to get in yesterday, a lot of people didn't. Let's see if the pullback works. And again, this is an aggressive trade. Probably won't work. I don't know. The market's been very volatile. But I'm seeing a little bit of a double top. And the last time we spoke, this was my bearish entry for some bearish perspective. Well, Steven Steckler, a few other traders made some really solid R trades yesterday and locked in some profit. So I'm saying to myself, all right, well, this could be a double top, potentially kind of an ugly one, but if we retest this neckline, I'm going to go bearish, place my stop at 113. Target number 1 is down here, which is about a 1 to 2, so 105.90. So risk reward is okay. It's fair to Midland. But we're below all the moving averages. Here's your exponential moving averages. So we're below the 10, the 20, and the 50 on the daily. Come over to the weekly chart on Apple. The 10 has crossed the 50 exponential moving average, which has not happened very often on a weekly chart. We made lower lows and lower highs this week. Looks like some type of evening star reversal pattern. So yeah, I'm just slightly more bearish and bullish on Apple. I'm not saying I have to go to 0, but we could roll back down to the support and maybe ultimately back down to 94.83. Earnings is coming up. Really excited to see what earnings is going to do. Let's go look at PayPal. PayPal finally moved for us. As you guys know, we've been tracking PayPal for just a little bit. Our bearish entry was 33.74. Our initial stop, I believe, was right here at 35.71. So that was our risk reward. Then we moved the stop down on PayPal to here. And yesterday on Tech Giant Tuesday, moved the stop on PayPal to break even, which is 33.74. I'm going to see if I can take half of our profits off at $30.10, which is the low of this giant bullish candle from that infamous Monday. And I'll probably move the stop down again to about 32.84 and some change in a week or two if we don't trade to those targets. Twitter. Hopping over to Twitter, not doing much. Still a little bit of a triangle pattern. There's a lot of people out there fighting for Twitter to be bullish, to get a buyout. I just don't think that's going to happen. We got triggered into Twitter bearish on, what day is that? The 9th of September. And so we're barely profitable in that trade, just barely. But we have been moving the stop down incrementally over the last few days. Nice triangle pattern. Could hang out in there until earnings, which is also in the month of October, which is tomorrow. So really interesting stuff right there. So that's Twitter. What else you guys want to look at? Facebook. Facebook had a nice little bearish move last 3 days. A little bit of a gap up retest today. That's just kind of hanging out. British Petroleum. British Petroleum had a kind of a nice little gap today as well. It's battling the 10 exponential moving average on the daily. Might get stopped out of British Petroleum. 30.70 is my stop. This is obviously a very, very aggressive trade. I will try it again, though, if it doesn't work this time. I'm just trying to do a limit sell on some pullback. So maybe we'll do something like this and get a stop in up here. But I am looking to short off the 20 EMA or the 50 exponential moving average again on British Petroleum. Today, from 5 to 6 Eastern, is Energy Wednesday, as it is on every Wednesday for my swing traders out there. So we'll be looking at British Petroleum. We'll be checking out CVX. Chevron got our stop on our bearish trade at 80.57. Just hasn't really been working, trading sideways. I'm also going to look to short this thing off the 50 exponential on the daily because we haven't hit that in a while, and I think it's due for a little bit of a rollover. ExxonMobil. So we got this bear call spread up here, the 77.50-80 bear call spread. The 50 exponential moving average, which is at 75.54, should provide a little bit of resistance if we get there. Still haven't triggered in bearish. Waiting for a close below 71.31 just to see what might happen. Here's your weekly. Actually, this is your monthly. Here's your weekly exponential moving averages on ExxonMobil. And they're just kind of hanging out. So for the day trades right now, don't really have that much. The only thing that I'm really looking at fiercely is NVS, which I was very bullish on, I think 2 or 3 days ago with a gap, and that gap just plainly didn't work. So we ended up fading it. It was this day, 9:25. So it opened right here. I was very bullish. Just simply didn't work. So we faded it, traded the opposite direction, and made a little bit of profit on it. So today, kind of the same thing. It's a nice little bullish retest gap. It's gapping up to the 10 exponential moving averages. So I'm looking to fade this bad boy. Initially, it was by the low stop, high of the day, entry low of the day. So 91.57 by 92.09. I'm going to see if I can roll over for some solid. I'm going to leave this alone for a while. I'll probably move the stop down to about 91.93 in a few minutes just to mitigate my risk a little bit more. But I am kind of looking for NVS to fail a little bit lower today, potentially. Here's your 15-minute chart. And again, the 10 exponential on the 15, still pretty far away. Here's the hourly chart. If you come over to the hourly, you'll really see, I think, why I'm looking to go bearish on this one. Trade up right up to the 50 exponential like it did that time. And it's also at the 10 exponential on the daily, like it did the other day. So I'm just kind of saying, all right, well, let's see if history repeats itself. Let's find out how it moves. Ladies and gentlemen, thanks so much for watching this Real Life Stock Review. If you guys ever have any questions, concerns, thoughts, opposing views, or stocks you want me to look at, or stocks you want me to analyze, feel free to message me. You can find me on Twitter at Newsome Nuggets, LinkedIn, I'm there, Facebook, I'm there. I'm everywhere. Hopefully you're everywhere. I'll see you guys Friday. And until then, remember, love life, live life, and trade it.